Well, good morning. Welcome back to Coffee and Cash with Simmons Capital Group. As a quick reminder, the first week of each month, we're going to attempt to do a brief update on the markets, some of the major headlines from the month before, some of the more interesting stories that we've kind of come across, and hopefully provide you with a brief summary of some of the major things to be aware of moving forward. So I came in last Friday, which was Black Friday after Thanksgiving, full of turkey, stuffing, and optimism, and instead was met with news, obviously, of a new variant, a new virus variant coming out of South Africa, which is obviously where I come from. So I take it personally, but it's one of those things where obviously, you know, as a society, we're very clued in and very sensitive to any news of new variants. So the market reaction was obviously initially very negative. That's kind of the knee-jerk reaction I think that we have to get used to. And we've seen this when previous variants have been announced, Alpha, Beta, Delta, all the various other things. Since then, the market kind of has bounced around between optimism and pessimism as more data has become available. And it's still really, really early to tell ultimately the effect that this new variant may have, both on, the health of people around the globe, but also the economic progress and the economic recovery that we've been experiencing over the last 18 months. Some of the major concerns with any kind of variant is this going to force us back into widespread lockdowns, the likes of which we saw in early 2020? And of course, that has a significant economic cost, right, for the global economy. So that's always ultimately the worst case scenario. Right now, as we look at Omicron as a variant, it's very early. It's too early to really tell some of the major concerns, right? Number one, is it more transmissible than previous variants? Number two, is it more severe if you do get it? Third, do our current vaccines work, and are they effective at preventing significantly severe disease and sickness? And so all of these things remain unresolved. And until we get some more resolution, some more data, you should expect that will continue to cause volatility in the markets. At the end of the day, it's unlikely that we would go back into full-scale lockdowns, right? I think certainly we have better defenses in place than we did in early 2020. And even if the current vaccines are not effective, or maybe not super effective, with some fancy editing of those vaccines and the various aspects that go into that, they could well have new defenses against that within a very short time frame. So we'll continue to monitor it, continue to see kind of how that plays out. But certainly, obviously, that is taking up a lot of the airwaves. In addition to that, a major point of volatility this last week, the final week of November, was Chairman of the Fed, Jay Powell, came out and basically signaled that they may start tapering at a more rapid pace than expected. So just very briefly, tapering is really the unwinding or the slowing down of the support measures that the Federal Reserve or the central bank has put in place since the pandemic. As a quick reminder, since the pandemic started, the Federal Reserve has launched a bond buying program, also known as quantitative easing, where essentially they've been buying $120 billion worth of bonds every single month. Most people don't know or really care about this, but it certainly has provided a degree of support to the financial markets and the economy, and it's just very accommodating, right? It's an accommodative type of policy, and so obviously tapering or scaling back of these purchases is the first step to the Fed withdrawing some level of support to the markets and the economy. And so ultimately, we have to wait and see how that looks. In November, they started reducing the purchases down from $120 billion to 105, so about a $15 billion decrease, a fairly small, relatively small decrease, but still a significant amount of support in the markets. And so obviously the fear from the markets is that if that is withdrawn at a faster rate, obviously towards the end of tapering, the next wave of reduction of support is generally going to be raising of interest rates, right? So that's something that the market obviously is not at this point really priced for or expecting. And so any chatter around Federal Reserve policy as it relates to faster than expected tapering and maybe sooner than expected interest rate hikes, I would expect to cause some negative movements, certainly in the financial markets. So, all in all, this is not an incredibly optimistic update for you, but I do think it kind of hits on some of the major themes. And I think that we should expect into the end of the year to brace ourselves for a little bit more volatility than maybe we've seen throughout the rest of 2021, which has generally been a really solid, really kind of benign year in terms of volatility. And again, issues about the debt ceiling still to be resolved in the coming weeks. As we learn more about the variant, that could either play positive or negative relative to the markets. And as we learn more about the tapering plans, that again could play certainly a big role in terms of how the markets respond and react. So it remains to be seen. We'll keep monitoring it, and obviously we've just placed a wave of kind of rebalancing, repositioning trades in client accounts. We are hosting a webinar next week. It would be December the 8th, and we'll send out some more details about that in terms of how to sign up for that. And basically the idea is we'll do a brief economic outlook, we'll walk through some of the changes recently made in portfolios, and have a lot of Q&A time for you to ask questions kind of live on that webinar in order to kind of get answers to those burning questions that you may have. So feel free to join us. We'd love to have you. In the meantime, as always, if you have any questions, feel free to call, email, book time on our calendars. We'd be more than happy to talk to you. In the meantime, if we don't talk personally before then, have a wonderful festive season into the new year, and we look forward to catching up again soon. Thanks so much for watching. Have a great day.